Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. A little bit of news this week. A couple of banks not doing so well. That does seem to be a recurring theme now this spring of 2023. So I made a false promise last week. I thought Tori was coming back this week, but instead I thought to myself, you know who knows more than anybody else here? Rob. So I brought Rob back for the second week in a row. So Rob, I appreciate you taking the time. I know I kind of blindsided you with this today. So thank you, sir, for coming and joining me again.
Always a pleasure.
So we were talking a little bit earlier. You brought something up to me when you were looking at the gold charts. I had mentioned last week when we talked about this that we saw this interesting Monday morning spike that might be cleaning out some pricing on the top end.
Right.
For gold to push higher in response to the FOMC meeting. Lo and behold, that's exactly what ended up happening.
Correct.
Well, you pointed it out. We may have seen it again this week.
Yeah, just this morning.
Right. So right at open, had a nice little shoot up and back down, and then settled back where we started. A little heartbeat. Mm-hmm. Speaking of heartbeats, wait till we look at the U.S. dollar because it's lacking one. But a little heartbeat in both the gold and silver market this week. So I just want to ask, because I honestly have been swamped today and haven't been able to check. What am I missing that's coming up in the next couple days?
Well, that's just it. Every week, people will call and like, what's happening? I'm like, well, I'm trying to get used to the new normal. Well, what's the new normal, Rob? That's just it. Every week it's something different or something worse. It never seems to go in the right direction. We continue to go down a road that I think is going to lead to real problems. I think we're already in them and they just keep getting worse.
So it may not be a specific thing.
Who knows? Every week, it always seems like there's more bad news waiting for us each week.
Right. Well, and on the heels of that, we noticed last week, if I'm not mistaken, I think gold did put in a new all-time high, at least in the futures market price, up in the 2080, 2085 range.
Right.
So we're seeing gold react. You know, and I've said this in years past, there's kind of this understanding that bad news is good for gold and good news is bad for gold. And I don't know if that's necessarily it. I think it's a little more specific than that. I think it's uncertainty is good for gold.
I think that's a better way of putting it. And there's so much uncertainty circling all around.
And you're starting to see, say, the VIX, the volatility index, is starting to get a little bit more volatile, and the highs are starting to get a little higher. The lows are starting to get a little higher. You're starting to see the VIX start to slide upwards a little bit as well. So there is this mass uncertainty across the board. Now, I think most people in the financial world, and that doesn't just include financial advisors. I think that includes anybody who pays attention to their investment portfolio. I don't know a lot of people out there that are really optimistic about the U.S. stock market going forward.
No, there's so much money, Miles. I can go either way with that. We could see the Dow Jones Industrials at 50,000 with $5,000 or $10,000 gold because there's just so much money. I don't know. I know that the profits of these corporations, some are doing extremely well, some not so much. There's a lot of layoffs occurring in different sectors. There's enough bad news out there that could drag equities lower, but there's also profits being made that could drag those certain companies, like the oil companies are having a banner year and a half. So there's other things that are happening at the same time. I mean, it's a push-pull type of a market.
Sure. And I'm glad you bring that up. That while you were saying that, it made me think of one of my favorite quotes from John Maynard Keynes. Wealth is neither created nor destroyed. It simply changes hands. What's interesting about this to me is the guy who is attributed being sort of the godfather of our current economic system, or at least the philosophy that a lot of our current economic system is built on, was the first person to admit that the thing they're using to kind of throttle the market forward and backwards doesn't actually qualify as wealth. It's not a thing. So it makes perfect sense to me that as we're seeing this massive shift of wealth from one hand to another, you're seeing it take place simultaneously with this significant decline in the thing that most Americans think defines wealth, and that's the U.S. dollar. And I think it's important to make that differentiation. Land matters. Gold matters. Hard assets matter. You can't make more gold, but you can print more dollars to pay for it. And that's why we're seeing that gold pushing all-time highs at a time when people are very concerned.
Well, you can make more gold. It's just very minor in comparison to the growth of debt and currency. Debt and currency is increasing 5 to 7 times greater than the amount of new gold coming out of the ground.
Right. You're talking mining. I was talking apothecary.
Okay.
Okay. So I'm not a star. I can't compress atoms into bigger atoms. So, but you are correct. Yeah. And it's interesting, despite all the technology, like gold getting dug out of the ground has kind of a very measured rate that happens on an annual basis.
Right.
That increases slowly, but it's not the logarithmic growth that you see in something like the US dollar. So it doesn't surprise me at all to see gold up here, parked right around the all-time highs. Traders are going to trade. We do what we do. Mm-hmm. People are going to try to pick and choose and profit and loss and all that stuff that we like to do that makes us think we're smarter than the universe is. But the reality is eventually, that dam's going to burst.
And it all catches up eventually.
And then the Aden sisters are right, and we're looking at the end of that sea wave rise. And Lord knows where that takes us to in this next move.
Well, and I think on this particular move for this year, I think it's reasonable to expect gold in the next 3 to 4 months to top out somewhere around 2,350 to 2,500. What do you think about that?
Well, I know we've talked about to fit certain kind of categories of how you tend to see markets move. Yeah. 2,350 is kind of a baseline minimum. Now, what we do beyond that, I'm not entirely sure because, like I said, traders are going to trade.
Right.
There is enough collective power behind all of us and our couple $1,000s here and there to kind of bundle that up into a giant fist that can punch the market the other direction. But I think you're completely right on that, which is why I'm very inclined towards a dual strategy when it comes to metals investing right now. You've got to be doing something on a regular basis no matter what.
Right.
When we get into the final phase of a bull market, there's no grabbing onto the coattails. It's too late.
Well, and we're still, I'm going to guess, maybe 5 years out from the peak of where we are now, at least looking forward as best we can.
Oh, absolutely. The last bull market started in, 2004?
Mm-hmm.
Most people just didn't realize it till 2009.
Right.
That it was taking place. When I came to work here, gold was $300.
Yep.
It was $2,000 less than 10 years later. Then we had our correction. We're back down to 1,200. So 2 steps forward, 1 step back.
Right.
And the bull market started in 2015.
Yep.
Now we're back up to the old highs.
How much further do you expect us to go?
I don't know.
Yeah, I don't know if you can.
How many
now.
U.S. dollars are they going to print?
That's the question.
So,
and that's the only way they have out.
Well, they could lower spending and raise taxes simultaneously.
You're right.
So they have 2 options. So we could either go the route of hyperinflation and just hope, because we're getting to the point where the people making this decision are old enough to where they might be able to keep the lie going another 10 years so they can retire and then pass it off on the next generation of congressmen and women.
Yeah.
I honestly think there's some legitimacy to that. I had a 75-year-old guy on the phone yesterday blaming me for the economic crisis we're facing right now. I'm like, I'm 40. I didn't do this. I could just start being president 5 years ago. Right. How's this my fault? So I think there may be some of that, unfortunately. But in the meantime, getting back to what I was saying, like what practical action do you take to do this? I think you do some consistency.
Right.
And you keep a little bit of powder dry for those times where you and I get on the show and we say, guys, we're topping out. We're going to see a pullback. We need to be looking for those prices. Keep buying along the way in case I'm wrong. But if I'm not, and we do get a $150 drop, well, you got that dry powder sitting in the savings account. And I think you've got to take a dual strategy here with your metals investing.
Well, and people also need to kind of get a hold of where they think we are going. If they think that the adults will come back into power and start correcting things, that would be wonderful. But our government is already set on a path that's kind of unchangeable with the higher interest payments on the $32 trillion debt, et cetera, the Social Security. We're already locked in to spending that you can't really cut the spending from Social Security and interest payments and pensions. When you look at the pie chart of the budget, you can cut a little bit in defense, but that may be treacherous or maybe wrong-headed considering what's happening in the world right now. So we're kind of locked in. I think we're headed towards something that none of us want to see. Well, let's get back to the charts.
Sure. So you brought this up earlier this morning. We did have a little bit of a spike. So I kind of zoomed in and I wanted to take a really close look here at the gold charts. Normally I like to look at weekly and monthly and what's going on over 6 months, but here I'm looking at a chart just basically over the last week. Very short time frame because we're scraping that top. We've got a futures market breakout already that came back down. We're waiting for something in the physical and the spot price to coincide. So we had a push up last week to those highs. We had a pretty good drop off beginning of this week on Monday, but we've been climbing back up towards those highs all week. And like you said, we had this big spike at the beginning of today. You hit an all-time high, you should have a pretty significant pullback.
Right. You would expect a lot more to the downside than what we're seeing.
So what's the only alternative if you don't?
Exactly.
And that's my question. I mean, we've been at this price 3 times now. It ain't going to hold forever.
No, they keep pushing up against the stops, and I think they're trying to clear the ceiling so to move higher. That's what it looks like to me.
Because the only other alternative, when you get to the outliers in any statistic, when you get to the outliers, like the only way the seesaw can go from here is it's either going higher or it's going all the way back the other direction. And I don't see $1,600 gold again in our near future.
Well, and I would love to see 1950, but it's not shaping up to do that.
Yeah. Yeah, well, that's my dual strategy right there is you got to do something every couple of weeks, even if it's little. That's what Vaulted's for.
Yep.
And then, man, if that happens, great. I'm shaking the couch out somewhere because at this point, it's been 3 touches at all-time highs, and we know what happened when this happened back at 850.
Well, they're triggering the sell orders when they do this. That's what you and I were talking about last week. So all these sell orders at 2050, 2070, 2080, those are being done.
Right. But there's no momentum following it.
No. There's
no
momentum.
New sell orders that come in after they get hit.
No. And there's no downside. It settles back to where we are today in the mid-2030s. Yeah, hold on.
Right. And when the first time it settles back is the high 19s, and the second time is 2010, and the third time is 2030, you're losing liquidity momentum. There's no momentum that follows.
It's what we call a clue.
And when you get into new territory that something has never been at before, it's really hard to predict where some of those next highs are going to end up being.
Very true.
So moving over to silver, we're not actually in all-time high territory, but we are in like annual high territory. You know, we're scraping up against those early 2022 highs. Again, if gold breaks through, silver is going to be hot on the heels. It's going to be $30, $35, $40 silver pretty quickly afterwards.
Here we go.
And just because I don't want to be super optimistic, because you guys know me and I love talking about gold going down, I'm spending a whole show talking about gold going up. Let's talk about something going down. How's the stock market looking these days? Should I bother? The Dow, I pointed out this declining long-term trend that goes all the way back to like January of 2022. We had a great bounce last year. It was really nice to see the dead cat bounce in the stock market. Nobody believes it's a reversal back up. Nobody does. So obviously it is what it is. But since then, we've tried and just failed and failed and failed to put in short-term ceilings. That's also declining as well. And now with the Dow sitting at around 33.5, I think I mentioned the other week I was expecting to see the Dow probably in the 30 to 31 range. I still think we're probably going to see that sooner than later. I just don't see the equities market getting any stronger.
Not in the near term, no.
No. And at least the equities market got a dead cat bounce because the U.S. dollar certainly hasn't. RIP U.S. dollar index as of April 2023. We have completely flatlined despite interest rate rises. the lack of interest internationally for the United States currency is pacing our ability to entice interest by raising interest rates. So the US dollar has completely flatlined. We're pushing just above 100 again. When we broke 100, the interest rates were sub 1. Now we're back down to 100, and interest rates are 5 times what they were last time we were here.
And it's not helping.
And it's definitely not helping. So international hunger for the US dollar, supply has met demand.
Yep.
That's where we're at now, and that's why you're seeing the U.S. dollar completely flatlining over the last couple months. You want to see international hunger for the U.S. dollar increase, you're going to see significantly higher interest rates at a faster pace. If you don't care about the international desire for the U.S. dollar, we can keep going the speed we're going to try to fix domestic problems, but the dollar is going to continue down while the interest rate goes up. And that's a scary world to live in, where the cost of borrowing money is going up while the purchasing power is going down.
Well said.
We started pretty optimistic. I don't want to finish pessimistic. What are your clients asking you this week? I like asking you that every week. What's the hot button this week?
How am I going to use my gold and silver when the U.S. dollar converts to the crypto dollar?
Oh, that's a really good one. How are you going to do that?
It'll be like when I was in the Soviet Union back in 1977 as part of my college. There were 30 of us traveling the entire Soviet Union for about 3 months. And they had a saying back then, the average people, we pretend to work, they pretend to pay us. So they would get paid in a ruble and they would go to an empty store. You'd go to a dairy store, you'd have pictures of cheese and milk, and you'd go to a department store and they would have almost completely 99% bare shelves. Now, if you were part of the Communist Party, which was 2% of the population, you could go to your store because you were paid in a different currency and buy anything you wanted. And I saw both. I saw people standing in line tapping the shoulder of the person in front of them, what's in the store, because there were no signs out in front of these stores. It was just a doorway, maybe a window you could look in. So I don't know how it's all going to play out here, but the people in charge of the reins of power, the people in charge of the reins of media, education, you name it, they are dedicated socialists. I mean, there's no other word for it. And I think that they want to turn America into a socialist paradise like what's happening in California. And I don't know that we'll get there. Maybe the adults will come back into power and we'll turn away from a socialist agenda. But you have to understand that our economy and our political system and our media, they are ideologues. They are driven by ideology, not market-driven. They are ideology-driven. Would love it if we could get back to a system that actually works, but they're not looking for things that work. They're looking for things to change fundamentally our country itself that we've grown up with. And that's what's so frightening for people, is that they don't see this. They just see a rapid change over the last few years and are wondering what's causing this. But the McIlvaney Group has been talking about this for decades.
So you mention the change, and obviously this is the problem we're seeing as we're moving towards, say, that digital currency concept.
Right.
You've got much larger control with a lot less autonomy and independence underneath it for the person using the currency.
Right.
What does gold and silver do in that kind of situation?
Well, for the basics, yes, you can always use it for barter. Okay, I get that. But mostly it's just capital. It's taking your hard-earned money and putting it into gold especially, that will maintain its purchasing power over the next 5 years. If you leave it in the bank, even if you're using the numbers that are being reported as to what inflation is, which I think you can double and be closer to truth, at least Shadow Stats would say that. If you leave $100,000 in the bank over the next 5 years, you can reasonably expect to lose anywhere from 1/3 to half of your purchasing power of what it costs to live and function.
Right.
But if you use gold, if you just park it in gold over the next 5 years, it looks like it's going up in value, but really it's just holding its purchasing power for you.
Right. So
And
it doesn't have to be the barter item.
no, it's just capital.
Yeah, it could be the thing that you own for a period of time that you convert either, well, today back into U.S. dollars. 50 years ago, it was a gold-backed dollar. Then it became an OPEC-backed dollar. Now it's becoming a good name of the U.S. government-backed dollar.
Right.
But you can always convert that gold at the fair market price back into whatever the currency is at the time
Or whatever good or services you need at that time.
in a barter situation. So it really does serve multiple purposes depending on how bad things could get.
And we don't know that they will. I think the best we can hope for is Jimmy Carter inflation. That's the best we can hope for. It gets worse from there.
Well, true. Well, and we saw Jimmy Carter inflation on the heels of the last time we changed what the U.S. dollar meant.
Right.
So it's very likely when we change what the U.S. dollar means again, makes a lot of sense to have something that is probably going to be fairly insulated from that.
The hard part is for our clients is trying to communicate this to their family members or their friends. And the best thing they could do is let us do our job. Give us a call and we'll try to lay this out in a way that's not scaring people, but just helping them come to grips with what reality actually is and where they want to take us.
I like that, yeah. And that's a good call that a lot of people may want to be involved in, too.
Yeah.
There's been a number of times where, say, parents who have been investing for their kids' future for years just want to get the kids on the call with them.
Yeah.
And that's something that your advisor here at McIlvaney Precious Metals can help you out with as well. So thanks again, Rob. Covered a lot of ground today. So charts, politics, personal opinions about where we think gold's going. I hope that all made sense to you guys out in listener land. If it didn't, why not give us a buzz? Rob, myself, or anyone else here at McIlvaney Precious Metals, we're happy to talk with you about your personal portfolio and how you see setting up your assets and how it can best affect your family going
And your
forward.
legacy.
And your legacy. So give us a call. Our phone number is 800-525-9556. You can find more info on our website at McIlvaney.com. We are on Twitter at ICA Gold and on Facebook at McIlvaney Financial. Thanks again for listening and have a great week.